Today is the 5th of April, and with just 10 hours to go until the 22-23 ISA year closes, there's no better time to hop in and take stock of exactly where the portfolio has gone over the last year. This is something that I tend to do around this time every year because there's a clear milestone, it's a clear new financial year, and you can have a look back at exactly how you've performed over the last year and how that compares to previous years as well. Over the last year, we've had lots going on in the world. There's been the Russia-Ukraine conflict, which has kind of rumbled on for over 12 months now. We've had rampant inflation, we've had massive price rises, we've had a cost of living crisis, and we've had interest rates which have gone through the roof. But I've managed to stay consistent and invest around £300 per month into my Vanguard ISA. So today we're going to hop in and have a look at exactly what's happened over the last year. We're going to break it down, we're going to compare exactly what happened this year to last year and kind of see where we're at. I hope you get some value out of this video, and as always, this is just to document my progress throughout time and hopefully inspire some of you to realise that actually investing consistently, even if it's just a small amount every single month, can really add up to something you can be proud of. At this point last year, on the 5th of April, my Vanguard ISA was valued at £11,574.19, with a personal rate of return of over 42%. You'll also notice that the S&P 500 was my largest holding, albeit at 37% weighting of my overall portfolio. And that's one of the things that's really changed this year. If we hop into my portfolio at this point, at the end of the 22-23 tax year, you'll see that it's valued at £15,408.42. So there's been a definite growth since this time last year, partly because of my consistent investments and, well, not so much because of any capital gains, but we'll talk about that more in a moment. My personal rate of return has fallen from the 42% that it was last year back down to 26.88%. Something that I should mention is the rate of return it shows on Vanguard is called time-weighted rate of return instead of being cash on cash. So whilst you'll look at how much I've invested versus how much it's worth now and think that actually it's not a 26% rate of return, that's because any new cash you put in is weighted differently dependent on how long it's been in the portfolio. My largest holding is of course still the S&P 500 with a current value of £7,462.20, making up 48.5% of my ISA, which means that it's actually increased weighting within my portfolio of around 10% since this time last year. And if you go back and watch that video, which you can find somewhere up here, that was going to be one of my main focuses of the year, so I'm really pleased that I've managed to achieve that. My ISA allowance is still sat at £15,955, which means that I haven't fully utilised it this year, but of course I didn't expect to. This is more money than I've ever put into an ISA within any of the previous tax years, so it does still show progress in the right direction, which again is something that I can reflect on as a positive from the year. From the performance tab, we can see that since inception, so almost 4 years at this point, I've invested £13,790, and those have returned me £1,618.42. Now of course that is made up of both capital gains, dividends and interest earned on cash held within the account. You can again see that on the graph down here. We've talked through this quite a few times now, so I won't spend too long on it. The key points to remember here are that this is the COVID dip over here, which looks very, very small now comparatively. This is kind of the flat line that we saw last year where my monthly investments were slowly incrementally increasing the value of the portfolio, but there's no real capital gains or growth of any sense. It just pretty much went sideways for most of last year, didn't it really? And then this is the growth that we saw into December and through to January, and then the nice little drop off towards this new financial year. But something we're going to do, because it is obviously the end of the financial year, is we're going to have a look at exactly how I've performed since the 6th of April last year. And the way we're going to do that is first of all by clicking on this 1 year button just here, which will change it from 5th of April to 5th of April. Now, of course, the new financial year started on the 6th of April last year, so we'll just click there and view that. And what this will do is it will show us exactly what's happened over the last year. You can see on the 6th of April we started on £11,524.85, and over the last year I've invested a total of £4,045. That equates to approximately £335 per month, which again is in the ballpark that I was aiming for over the last year. You'll also notice that over the last year I've actually lost money and made a negative rate of return, losing £161.43 over the last financial year, meaning that I had a negative rate of return at negative 1.24%. So it's really important to mention here, there are obviously periods of time where you're in a bull market and it's just constantly returning money to you. And if you go back and look at some of my previous portfolio updates, you'll be able to see when everything was going in the right direction and everything was green. But there is, of course, also an other side to investing. It is, at the end of the day, a risky game. And whilst investing in ETFs and index funds reduces the risk as much as possible, there is still risk to it. So it's important to remember to not invest any more money than you can afford to lose, and to not expect to make money from it. Yes, history does show that over the long term you expect to make a positive rate of return. But if you're going to be investing for the long term, you do also have to be able to stomach large-scale pullbacks of 50% or more in some cases. So it is just worth bearing that in mind. So what we'll then do as well is we'll just actually click back a little bit further. So we'll set this start date back to April 2021, and we'll look at the last financial year previous to obviously this one ending. And we'll click on View, and that will show us the previous financial year. So in the previous financial year, this is back in April 21, the portfolio started on £6,888. So you can see how far it's come in those 2 years' time. Bearing in mind that over the last year, we haven't actually made any capital gains really. It's just been from cash that I've deposited. Over that last financial year, so 21-22, I invested £3,735. So I've actually managed to invest around £400 more this year than I had previously, which equates to around £35 extra every single month. And my investment did return to me £993, and I saw a positive rate of return of 10.19% last year, which is obviously in stark contrast to what I've seen this year. We'll click through to the calculations tab next. We can see that my current total gain or loss is £840.65, and that's money that I've still got invested. The investment sold, so the return to me that I've actually already crystallised is £341.41, with a gross interest of £1.74, and a total dividends now of £473.52. So it should hit the £500 mark once I receive these new dividends into my account, which we're still waiting on, unfortunately. And total charges of £38.90. Staying in the performance tab for a while, we'll look at the month-on-month data, and you'll be able to see so far in the month of April, so in the first 5 days, I've managed to invest £300 so far this month. We're already seeing a loss of £75.08, but I've seen a income return or a interest return of 13p. Still waiting on those March dividends though, so as soon as they come in, I'll let you know exactly how much I've received, and obviously that equates the total investment returns so far in the month of April. We ended up in March, as I say, investing £300, losing just £12 really, so it kind of traded a little bit sideways last month, not really a whole lot happened. We'll then hop through to the investments tab, and again we can see this is from inception. So my emerging markets fund is down 3.5% here, or £42. The developed Asia Pacific ex Japan is up 21%, including dividends, or £91. The developed Europe ex UK is up 16.03%, or £152. So that has turned around quite substantially considering the conflict that's currently going on between Ukraine and Russia. We've got the FTSE Japan, which is just about up, including dividends, at 1.72%, or £10.68. I've had a few questions about why I'm actually investing in Japan, and I'll be honest, looking at that, I'm wondering why too. We've got the FTSE 100, which I'm up 39.89%, or £367.16. And then the S&P 500, currently up 32.96%, or £740.32 of return. And again, what we'll do, because it's obviously the end of the ISA year, is we'll just change this around to have a look at what's happened over the last year from a perspective of the individual accounts. I've actually had a gross return of 5% on my cash held within the account, which is, yeah, not too bad at all. The emerging markets over the last year is down, so is the Asia Pacific ex Japan, that one's down as well. The developed Europe ex UK, the FTSE Japan and the FTSE 100 are actually all up in this last tax year, and the S&P 500 is of course down. So kind of swings and roundabouts. There are of course some outliers which have actually had a fairly nice rate of return really, considering everything that's been going on out that way and the global market. We'll then go across the holdings tab, which of course breaks down the amount of units that are holding each of the funds. And again, this is something that people have obviously in the past said that they like to see, so they can compare where I am at the moment to where you guys are as well. The emerging markets fund, currently 14.27% of my portfolio, targeting 15%. The FTSE 100 currently 12.55%, again targeting 10% there, so a little bit higher than I want. The Asia Pacific ex Japan 4.69%, targeting 5%. The developed Europe ex-UK targeting 12%, currently sat at 11.8%, so very happy with where that's at the moment. The FTSE Japan targeting 8%, currently 7.61%. And finally, the S&P 500 down here, I want that to be 50% of my overall portfolio, currently sat at 48.83%. If we want to drill down even more, we can actually compare from my last year's video the actual units that I hold in each of these funds to see the distance travelled over the last year. For example, this time last year I held 30 units of the emerging market fund, whereas I now hold 50 units, meaning that I've increased it by around 66%. The FTSE 100, I held 47 units of the fund last year, I now hold 58. Now the reason for that is because I've always been slightly overexposed to the UK. I didn't want to completely stop investing in the UK because it's still an important area, but I've allocated additional capital to other geographical regions rather than the UK this year, which is why there's been not too much distance within that. The Asia Pacific ex Japan, I held 27 units of the fund last year and I currently hold 36 units. The FTSE Developed Europe ex UK, last year I held 29 units of the fund, I now hold 58 units of the fund, so I've doubled my holdings within this ETF. The FTSE Japan, I held 29 units of the fund last year and I currently hold 47 now. And the S&P 500, I held 67 units of the fund last year, I now hold a whopping 121. So again, lots of cash put into both the S&P 500 and the Developed Europe ex UK over this last tax year. And that rounds up quite nice and neatly the 2022-2023 tax year. It's definitely been an interesting one, but it's really rung home to me the power of staying consistent. Whilst my portfolio hasn't actually returned anything to me over this last year, what I have been doing is accumulating investments and accumulating units of the fund at a cheaper rate than they have been previously, which means that when we do see our next bull market run, I'm going to be in a great position to be able to reap the rewards of the investments that I've made throughout this period of time. And of course, while the past can't predict future returns, there's never been a period of time, a period of 20 years in history where you'd have been worse off for investing than you would have been had you not have done. So on finishing and rounding up the 22-23 tax year, my portfolio, my ISA, is valued at £15,408.42. I do think that, obviously dependent on market fluctuations, realistically this could be at £20,000 this time next year, which is pretty fantastic, to be honest with you. But of course, if you want to catch up with all of my future updates and see me get there, make sure you subscribe to the channel and like the video to keep up to date with all of my future Vanguard, Trading 212 and Coinbase updates. It's been such a difficult choice this year to decide where to put my ISA for 23-24. So if you haven't yet checked out this video, make sure you check it out next, which will tell you where I'm going to be holding my ISA for next year, so you can expect to see lots of information coming out on that very, very soon. And if you are interested in obviously all of my Vanguard updates, make sure you check out this playlist next, which talks you through from the very beginning, back in May of 2020 when I started recording on YouTube, right up to now. I'll see you in one of them.